Good Fed week, everybody. How's everyone doing today? Going to have a exciting week. It started off wild over the weekend. I was starting to become pretty jaded about, maybe you guys have heard this before, never go home short crude over the weekend. Who's heard that out there? So, I can't remember the last time that saying saved you. Hello, Cheryl. So I can't remember the last time we had something like this, very significant $5 gap higher opening in crude. So I would write that down. Okay. Several times you've seen that, Gary? Or you've heard it several times? Because I don't remember anything like this in a long time. All right. Anyway, so I don't know who came up with that expression, but it saved a lot of people's ass right here this week. And with the Fed coming up, there's going to be plenty of opportunities, trading opportunities. And you know what? Since 2016, okay, I have a hard time remembering that far back, and I have a reputation as an elephant. I don't remember that event. I don't know what happened there, but everyone, you guys should get prepared for the Fed. I think this is the best way for you to do it. Grab a deal and then have everything at your fingertips. This way, could save you a little bit of time on, although, you don't want to become dependent on anything or anyone. But I'll tell you what, if you're like me and believe that money comes and goes, but time is gone forever, and you want to save time not having to do all this work, you have to do your work, but what a resource. And say you're like me, and I don't know Elliott Wave, but you know what? This guy does. So what an advantage to have Greg as counts, right? Whoops, did I get rid of everything? Oh my gosh. Am I still here?
No, you're not.
I'm not? Where's my screen? See, it looks like maybe I just erased the charts and the God, it was in a passionate mood about the service here. Can you guys see me?
We'll know how passionate you are. Yes.
Okay. Anyway, so great deal. I don't know. I don't see ForexAnalytix light up here. How do people find that, Steve?
Why don't you go to pricing?
Okay. I thought I did that yesterday. You mean here?
Top.
Oh, okay. Oh, there you go. Look at this. And there's light. All right. So for those of you on a diet, here you go. And, this is great for people to trade with maybe, a couple grand, where paying, 2 or 3 or 4%, whatever, a month for research, it can affect you. Even though I'm a big believer that when, penny wise, dollar foolish, you either invest in yourself to trade, you pay for that, and that type of, oh, okay. All right. So I'm going to hand it over to Blake. I don't know what to do here in the markets. I would wait for the Fed. That's what I'm, call me prudent. But I just have one more thing, and then I'm going to pass it to Blake. this is a very important area in the S&Ps. And I think Steve and I were talking about, everyone's waiting till after the Fed to short it, and maybe there isn't an opportunity to do so. And if you start seeing trades under 29.75, which it came pretty close to last night, got to 80, that's going to be your first sign that the top is being sealed, because that would take it right back to the major breakout right here, 29.40. And this is definitely the judge and jury and verdict about an S&P correction, in my view, back under the breakout. So we'll see if the Fed, when they come in, if they could generate a new high or a failing rally. I'm starting to think it could be a failing rally, or maybe everyone's thinking like me right here, and they go home flat or long into the Fed, and instead of generating any kind of rally, now that crude is up, they could justify not being too dovish, right? So here's an excuse for Powell to rebel against President Trump's call for zero interest rates. He could point to oil, because and I've been around long enough to know that oil shocks have really created inflationary spirals. I was around during Nixon, and people had win buttons, whip inflation now. So there's an out for the Fed if they're not ultra dovish now. Okay, so Blake, hope you had a great weekend. How you doing today, buddy?
Hey, Coach. How's it going?
Pretty good, pretty good. You know, what do you think about this situation here with and also, do you think it's kind of unusual or a coincidence if Iran did this, that it happened a few days after John Bolton was fired? He was the Iran hawk.
Yeah, I don't know. I think that's more coincidence than anything. But let's not take away the fact that this might be is supposed to be like the biggest disruption of crude oil supply ever, right? Ever.
Yeah, and I think
besides the embargoes.
I think, Blake, it was the biggest jump since the 1991 Kuwait.
Okay. Yeah.
I actually read that it's even more than that. But anyway, it's a big event.
It is a big event, and
event.
and so what we're seeing is, we're seeing this, move up in crude, but crude's kind of, it's kind of stalled a little bit to the upside here.
It looks
But
paralyzed.
yeah, but I'm surprised we're actually not up 20%. Yeah, I'm
Oh.
surprised that we're not up, trading around $65 versus 60. That that doesn't mean that it won't continue to go higher. I'm just thinking, myself, that it's a pretty low reaction. I got asked in the chat room, and I had family over yesterday, so I just popped in the chat room for a few minutes, and people were like, "Meow, what do you think you're going to do with crude?" And I don't trade crude, but I said my natural gut reaction would be, this type of event, you want to fade it off of the open, counter trend for a little bit, because people reassess. But now, after reassessing the situation, it's like, wow, this it's a pretty big deal. And I guess getting everything back up online is taking a little longer than expected. So I'm surprised that crude isn't.
How long will it take?
I don't know. I don't know. I read headlines as they come across the wires, but the bottom line is, I think crude could be, still stronger from here, and we are going to create a little bit of inflation. I would think it's going to, I remember the Nixon days too, because I was a little kid, and Dale was 94 at the time, and I was 6. He must have checked out already. Anyway, and I remember being in my mom's car waiting in lines, to get gas. It was crazy. But anyway, I'm like I said, I'm surprised crude hasn't gone
I
higher.
remember your mom was very beautiful.
Yeah, she was. Did you try to pick up on my mom back then?
Yeah, I said, but
I
I can't do it. That
yeah,
your son looks
yeah.
like he'd be a lot of trouble.
So but let's know that technically
You
crude
asked
backed
for
up.
it, man.
Right. Hey,
All right.
crude backed up to previous resistance, which is acting as current support. So technically, it stopped where it needed to stop, and we bounced from here. So where we go from here, it should be interesting. I guess I thinking about it right now. Like what I would do is I just put an alert on this trend line and say, hey, as long as we're above that, we're not breaking back below, let's just call it $59. Crude is probably, going to make its move back up towards 60. What is this? 60. Let me adjust this.
Oh, so it did
Probably.
spike up to almost 64
Yeah,
last.
I would assume that we're heading back into the mid 60s as long as
Yeah.
we stay above $59. I mean, technically, it's
Yeah.
that's what it should do. But stocks have recovered. We've seen we've seen the dollar strengthen a little bit as stocks have come back a little bit. So I don't I mean I don't know what to do here. I think everybody in my office in Greenwich is like, yeah, so big attack on oil refineries and biggest disruption in history, and nothing happens. It's like, man, that sucks.
Well, that weekly candle in the dollar sure looked bearish going home Friday.
It,
I
it
never
did.
would have. I never would have guessed
It did.
higher.
It did, and we've seen a recovery in the dollar. But if you look at the euro right now, we have this head and shoulder pattern. I got out of my pattern in play. I took because of my stops. Took some of my euro off. I still have some left, but I'm going to actually be adding to some euro longs down here on a 50% retracement once this head and shoulder completes. Yeah, that's what I'm hoping to do. I don't know if it's going to make it the whole way down here. I mean, we are past the 38% retracement, so we should. But the pound is actually firming up right now.
Do you hold
Boris,
stuff into the Fed, Blake?
it depends on my position.
Okay.
Actually, let me rephrase that. Depends on my position location. So, like, let's say let's put ourselves going into Thursday or Wednesday. So let's say my cost average in the euro. I'm just going to use an example here because this may or may not be the case. Let's say my position is around 110.50, and we're on Wednesday. We're trading up at 111. I would hold it then, because then I've got a 30, 40, 50 pip profit, and I can wiggle then from there.
Yeah.
But I won't go in
Down.
to a position down,
Okay.
or even break even. I would be like, I don't know. I don't know if I.
So if you have a lead, you'll risk the lead you have.
Yeah, exactly.
Okay, cool.
So hey, by the way, the cable's a little firmer right now because apparently the talks between the EU and Boris Johnson have gone, I guess, better, good. So we're seeing a little bit of the pound firm up just a little bit, just some food for thought there, as we're getting a little bit of rally from the lows. The cable still, and by the way, just looking at the cable, we're still above the one. As long as we're above 123.70, I think that the pound still is going to recover. This is we got to be careful of a little bit of a head and shoulder here. Possibly if we can't get back above like 125 soon. But I think one of the reasons why the cables pulled back is because the euro's pulled back. The dollar did strengthen today. But one of the other things I wanted to talk about is guys, we released our seasonal offer with ForexAnalytix, and we only do it a couple of times a year, and this is one of the best prices that you're going to get throughout the course of the year, and the offer does expire at the end of September. So what I'm trying to say here is, if you want to be involved with ForexAnalytix, this is the time to do it. So it is a 2-for-1 for a monthly plan, 25% off a 6-month plan, and the annual plan is 35% off. And it is really, if you think about what you get with ForexAnalytix, most companies that do some sort of subscription type of services, they have a website and it's like an updated blog. We have a platform that has news releases, Twitter integration, calendars, links to articles that are being updated. We have patterns in play that are and you can see how they've done over the course of time, what they've done, their statistical returns have been, patterns that we see that are potential trades that are setting up. You have all these different tickers and multiple types of analysis, support and resistance levels, and on top of all that, you have a great chat room with a huge community of traders. Right now there's probably 80 of us in there right now, maybe 83 of us in there right now. Huge, a nice community of traders. And then on top of that, you have a mobile application and you get notified when we have updates on analysis. All these, if you look at the update history, whenever you get these, like here's an Elliott wave update on gold, whenever you get, or this is silver, excuse me, you get an update on silver that's going to go to your mobile device. It notifies you whenever support and resistance levels are breached. You get notified via your mobile device. There's so much more than just some web page with access to a blog, and this has and it's an entire team delivering this information to you. So what you get for the amount that we charge, I mean, I know for a fact that we are way cheaper than most everybody out there, and we offer multiple times the information and the data and the technology that anybody has to offer. The reason why, just so you guys know the history of ForexAnalytix, when I left the Wise Trade Group, I wanted a landing place for people that had been with me for years. We've had traders that have, we've been, talking and chatting for 10, 15 years together. I wanted a safe place for them to land, and one that was inexpensive, that everybody could afford, that had the biggest bang for buck technology and information wise. And I feel that we as a company have delivered that, and I want all of you to be able to take advantage of it. So take advantage of these offers. These offers are great, and from a price point perspective. And then once you're locked in this great pricing that we have, you can continue with these with the offer. So anyway, hope you guys enjoy it and hope you take advantage of it, because it's something that I feel obviously very passionate about. But I hope you guys have all been able to benefit from it. All right. So anyway, let me see here. Let me take a look at the cable again. So the cable's come off just a bit. So we got a little squeeze higher above this trend line. I think the pound will continue to recover as long as the euro doesn't fold like a cheap suit, which the euro is still trading pretty heavy. One of the other positions that I've taken this morning is and Stelios is going to be happy about this. I actually shorted some US dollar Norwegian krona when we filled this gap today. Nice. So once we filled this gap, I'm like, okay, it's time to sell some, because if there's going to be a beneficiary here, if crude continues to stay strong, it's going to be Norway. So you could think, all right, maybe I'll short the dollar Canadian, but the dollar Canadian hadn't filled the gap completely. The US dollar Norwegian krona did. And so I actually shorted some US dollar Norwegian krona today. So Stelios, Steve, yep. Good morning, guys. Good morning. Stelios, what do you make of this whole situation?
Good morning, mate.
Hey, good morning. So what do you make of this whole thing? Yeah.
Yes, I think the reaction of the currencies tells us a lot. And if you see the currencies that theoretically should move a lot with oil, like you said, the CAD and the Norwegian krona, they're not doing much. I mean, they moved a little bit, then they come back. So I personally think that the market thinks that whatever disruption there is, we just got a headline, by the way, just about a minute ago, saying that it might take a few weeks to come back to normality. I think the market thinks that whatever the disruption is, it's going to go away, and until things are sorted, there are plenty of ways for the market to be supplied. You know, we've read about Russia.
Yeah. First of all, didn't we get a release of Trump said that he's going to release?
He said that, yes.
From the reserve, right? From the petroleum reserve.
Yes. And the Saudis also said the same, that if need be, they're going to do that. The Russians said they can ramp up production. They have a spare production. So I think the market thinks, yeah, okay, this is a big event, but the long-term effect, and I mean by long-term, I mean more than a couple of days or a week, let's say, is going to be smaller and smaller. So that's why I think we see currencies not really reacting that much to it. How will it unfold? I don't think any of us know, but it's likely that the whole thing will slowly go back to normality, and this will just be a blip.
Even if it's verified that Iran did it?
Oh, if it's verified that Iran did it, then that opens another door to all sorts of trouble. But yes,
because China's cautioning us to be patient. So
yeah. I mean, I'm not in general a conspiracy theorist, but we've been talking about it in the chat room, and we have the Aramco IPO coming up, and how convenient for the price to be higher. So, but
I like that.
Yeah, I don't know what's been happening really. I mean, I'm not there to know.
Mel Gibson.
Yeah. So that's my take on it. So I wouldn't, I think the price should slowly converge back to where neutral should be without this event, but it's going to take it's going to take some time, maybe a few weeks. I don't know.
Yeah, for me, I'm actually at this point in time, I'm even though the euro is pulled back here, I still believe the euro is going to go higher. So I'm using this pullback as an opportunity to buy more euros. But what I decided to do on top of that is to short some US dollar Norwegian krona, because you're going to get the effect of stronger crude if we do get stronger crude. Also, if I'm correct and the euro dollar does eventually break above 111 and heads towards 112, you're going to get a sell-off in the US dollar Norwegian krona, which, by the way, I think this is potentially a big head and shoulder pattern that's developing right here. So that would be a shoulder, that would be the head, and I think that we might be developing the right shoulder here after this, really big rally in the US dollar Norwegian krona. And then we had this false breakout over here. So I think this is going to be the play for me. I'd almost, rather just short the US dollar Norwegian krona and not have any euro exposure, which might actually be the case for me. But this is how I'm looking to play it for right now, because I do think this is going to be a fairly big deal. And you're right. If we do find out that Iran was, a key player in this event, then we've got some serious. You're going to see crude spike.
And remember, Blake. Sorry to interrupt. We have the Norges Bank this week who are expected to hike. It's not fully priced in, but they are expected to hike, and we have to see what they're going to say as well.
Guys, there goes the Aramco theory. Just got an alert. Saudi officials looking into Aramco IPO delay.
Yeah, that's just talk though at the moment. But yeah, that's an interesting headline. Okay, sorry about the interruption, Blake.
Yeah, no problem. So one of the, just because we got a question on the ForexAnalytix, the pricing, because everybody asks, well, not everybody, there's a couple of people that ask, well, what's with the light version? The light version is the ability to have the ForexAnalytix technology, but we remove some of the components for the people that have the premium package. What you're not going to have is you're not going to have the chat room access, and you're not going to have the patterns in play. But if there's a lot of traders out there that are
harmonics
and Elliott waves and harmonics, so you're going to get basic technical analysis. So imagine this: you have all of the other functionality, but you will not have the patterns in play. All right, and you will not have the harmonic and Elliott wave analysis. You'll have the macro candlestick and basic technical analysis, but you're going to have the news function when news is released. You're going to have that the data flash, so it gives you the immediate updates of what the news releases are.
Did you see what Paul Moulton said, Blake? That's to you.
No, I didn't.
You've helped keep my account alive since 2007.
Wow, that's awesome, Paul. And Paul's been around forever and a day, so that's great, you know. And I hope to continue that. And you know, we
70
have
more years, bro.
70 more years. we have a lot of functionality with ForexAnalytix and a lot of technology, and you'll be able to download the app and have all the notifications. You know, we do remove the chat room, which will be for the premium product, and then also the patterns in play and some of the advanced analysis, because there's so many traders that are just trying to get involved in a trading. Well, we give you a nice solution with, and we keep it simple with basic technical analysis, so you don't get so confused, you know, about but that harmonic and that Elliott wave, you know what, just focus on the basics and you can do it for 19 bucks a month. So but for those of you that are a little bit more advanced, you know, still take advantage of the offer that we have. But guys, I'm going to pass it over to you. I hope you guys have a wonderful day, and I'll be back tomorrow morning, obviously, for the face webinar. And I'm going to pass it back over to Stelios and Stephen. Make sure you visit our webinar sponsor, Forest Park FX.
Thank you, Blake, because yes, that is another thing they can do for themselves, is getting their subscription through the reimbursement program. I'm going to show it now. They can get their subscription subsidized, or if they're in the US, they can get cashbacks. And most importantly, with the help of Trent, Justin, and the company, they can find the proper broker to be, depending on what kind of an account they have, and most importantly, what type of trading they do. Because it's not the same brokerage firm that you want if you're a scalper than if you're a swing trader or a long-term trader. So it all depends, and these people are the best to help you with first priority, of course, being somewhere that your money are safe, and second priority, making sure that you pay the least possible for the type of trading you do, because nobody wants to be paying extra money for commissions, right? Still, what do we have?
Well, we talked about the main event. The other thing which Blake briefly mentioned was the UK and EU talks. So Boris Johnson is over in Brussels, I think, speaking to Jean-Claude Juncker over a glass of wine, I'm sure. Sorry, bad joke. And apparently Michael Barnier, also the chief negotiator for the EU side, is there. He wasn't supposed to be, but he is. So that when the headline came out, the sterling got a nice little push. Juncker did say a few minutes ago that the discussions are going well, or something like that. So overall, we've heard this before. But until something firm is actually announced, we shouldn't count our chickens. But things seem to be progressing okay. So that's from the Brexit saga. And as we said with Blake before, we have Norges Bank this week, which I think is going to be important, especially for people who trade the kroner, and I am also short dollar Norway, as most people know. And of course, the main event is Thursday, the FOMC, and we have to point out that the market is no longer pricing a full cut. Actually, at some point, the market was pricing a little bit over 25 basis points. Now it's pricing something more like 75 to 80% chance of a 25. So if they do cut 25 and the forward guidance doesn't change and they're neutral in every other way, the market's going to be a little bit, the dollar will probably inch lower, I think, because simply we're not pricing a full cut. But I think the associated commentary with the cut, which I think they're going to cut, there's no way they're going to disappoint the market in such a big way, and they don't want to disappoint Trump either. So the commentary is going to be crucial. And we have that to wait until Thursday. Other than that, it's been pretty quiet, actually. It's been all about oil. Actually, we did have some Chinese data which missed quite a bit with that. We had industrial production and retail sales. They missed, but then again, this is data that they tell us, you know, so is it right? Is it wrong? Nobody can know. But in any case,
I saw somebody saying, having to do with Chinese data, like, how the hell can you miss on fake data?
yeah, well, it is what it is. But they did miss projections. That's what happened, and that's about it. There's not much more to say, actually.
Okay. We also got an interesting Trump tweet, you know, saying that with Chinese data coming out bad and crude oil jumping, you know, the Fed has to do something about it, which I found, you know, quite peculiar in the sense that, you know, it's another more or less hypocritical message, because unfortunately Trump proved to be mostly a politician as the previous one was. That's why he has to, you know, he has taken a 180 degrees turn in the vast majority of the things he was saying as a candidate. So now, on one hand, he's trying to promote how much the sanctions and are hurting the Chinese economy, and he's fine with that. And now he's worried about it. How can both of those be true at the same time? I have no idea. Also, he seems to be claiming all the time that inflation is non-existent. Okay, he got a nice crude jump. That is definitely going to bleed in through inflation. So, you know, if he was really troubled by that, you know, that shouldn't be an issue. Although I have to say that the previous numbers we got, the core CPI was 2.4. I remind you that the Fed supposedly focuses quite a lot on the core CPI because they consider the energy and food prices quite volatile to matter. So, you know, core CPI is when you strip out energy and food and you see what's happening with the CPI having to do with the rest of the items. So theoretically speaking, they have targets 2%. Last reading we got on the year-on-year CPI was 2.4, so above target. Now, obviously, with this jump in crude, if it is sustainable, we're also going to get a jump higher in the nominal in the normal CPI. So, you know, definitely that makes the job somewhat harder in cutting rates. It's not that they're not going to cut rates. They're obviously going to be cutting rates this week. But, you know, if one of the things they claim is the problem is inflation, and, you know, you have overnight like a, you know, initially like 20% jump almost, and if crude actually settles like 10% or more higher, that immediately, you know, will start taking a toll and affecting the expected CPI. Keep in mind that almost everything the consumer, you know, has access to, one way or another, less or more, is being influenced by crude prices. So not much to add having to do with crude, although I do agree that USD NOK, and if you remember, we've been looking at that since last week, I do agree that USD NOK, especially with what happened yesterday, and despite the overnight sell-off being retraced, it looks to me like an amazing opportunity against like now 901, 902, and yes, it can easily you know, end up being a nice head and shoulders formation. So I think that, you know, since yesterday's event, the USD NOK potential for downside became even more interesting, at least for a move towards 880, 882, this horizontal support resistance area and previous breakout zone. Needless to say that if for some reason we break below there, eventually that's going to lead to a much bigger sell-off. So yes, USD NOK is one of the things I'm focusing on. Now, having to do with crude, you know, would you be buying it here? Yeah, I mean, it's 10% higher. I do understand that. But, you know, we've had, I wrote also the weekend analysis. We wrote there that we initially had a false break higher from this descending trend line, but the fact that we had a false break higher doesn't immediately mean that you know, it's bearish, right? Because we remain in a triangle. That's what I wrote. And in any case, sometimes you get a false start, not a false break, a false start. So, you know, especially with the price action that we're seeing today, it looks more like it was a false start, because I find it quite hard to believe that during the day we can see crude retracing, enough to get back in the triangle. Most likely, we're also going to close above this previous high at 58 and change. So quite an interesting development here, and I do think that you have to treat this as a breakout. Now, if you get quite lucky and we get a retracement back to 58.20, I think that's going to be a nice buying opportunity, although I consider it rather unlikely. We've already seen, quite a nice retracement from, what was the high here, 60 to like 70, 60 to 80 to 60 and a half. Now retracing back to 58.20, not impossible, but not very likely either. So yeah, that was the big development of the night. There's no question about it. At the same time, this also affected price action here in gold and silver. As you see, gold jumped once again from this 1485 support area, and silver was a lot more oversold, obviously. Silver is rebounding, but keep in mind, silver has now broken below this ascending channel. So, there is a good chance that we came up, we almost retested this, and we might continue lower, for lower prices. Now, that doesn't change the fact that I maintain a medium to long-term bullish bias in, having to do with the metals. But I would feel a lot more comfortable being long if we had spent more time correcting. It's not that silver hasn't corrected like enough in price, but I don't think this has been enough of a correction in time. And usually, you need to have some logical analogy between the two of them. How much you correct in price with how much you correct in time.
How about the velocity of the decline leads you to believe that after any kind of bounce that it has some work to do because of how fast it got from point A to point B, Steve?
Yeah, absolutely. Absolutely. I mean, I was quite comfortable. If you remember, we drew that. I mean, that was a perfect assessment of what's going to happen in gold and silver.
We had a chart of the day at the top at the 78.6.
Yeah, that was a different story. Blake literally top ticked silver. I mean, he top ticked it like by the hour. I mean, I think he posted the chart, and within like, I don't remember exactly, was it 1 hour, 2 hours, 3 hours, whatever, it just, crapped the bed, as he likes to say. That was an amazing top ticking. But I think that the assessment...
I wear depends.
What do you mean?
Depends.
Depends on what?
They're adult underwear, that diapers. All right.
Adult diapers, yes.
Yeah. Don't worry, Steve, you have some time.
Oh yeah. Hopefully I do have some time. Indeed.
Anyway.
Let's hope that they have a lot of...
Anyway, sorry to throw you off.
No worries.
Continue on, my friend.
Having to do, by the way, with the gold-silver issue, keep an eye here. We got an initial reaction from retesting that. I'm now monitoring this trend line resistance, because I have to tell you, it's not going to be a good sign for the bears if we actually break above this area, because then it will start looking like a completed correction, right? I mean, like a 3-leg correction here. So I would be quite careful with this one. I'm paying close attention. If we get rejected from here in the gold-silver ratio, I think there is more downside coming. But if we break higher, I think we might be headed, higher once again. I mean, we got an impressive correction in 0 time, and historically speaking,
looks like it could be an ABC.
Yeah, it does. It definitely does. I mean, let's also...
Great chart, Steve.
Let's also fib extend this, since you're mentioning it, to see how close to an equality target we got. Oh, we actually surpassed it, as you see.
Yeah, it was probably 1.23 or something. Some extension of it. 1.618, I doubt. But
this is the 1.608.
Yeah. So for people that don't know,
41.4. There you go.
So what Steve is saying is, if we break out and you want to be long metals, you want to be long gold. Okay. If you want to be short metals and we break out, you sell rallies in silver, because this is pointing towards, maybe gold is going to lead again to retest the highs. Right, bro?
Exactly what you're saying.
So good. That's why we follow things like this, right, Steve? So you know what your preferred long and short is.
Absolutely, because very frequently with similar type of products, let's say, you want to know what your preference should be in case you want to be short or in case you want to be long. We've done that also multiple times. Another example with Aussie Kiwi or Euro Pound. Like, do you want to be, when you want to be long one of those, let's say, commodity currencies, you want to be long the Aussie, or you'd rather be long the Kiwi? Who's going to tell you that? The Aussie Kiwi is going to tell you that. Speaking of the Aussie Kiwi, by the way, there you go. As you see, it's still on its way higher. So currently the 61.8 of this move lower. I mean, quite an interesting development here. So, until proven otherwise, the Aussie looks, better positioned against the Kiwi. Of course, I would be careful a little bit here. Confluence of resistance, as you see, resistance, this ascending channel's resistance, and the 61.8 from that move that started a year ago, a little bit more than a year ago, actually, like 13 months ago, August 2018. From that high to this low, it's the 61.8. So, worth paying attention here. If we can get some kind of a reaction from the Aussie Kiwi, we might get Kiwi overperforming for a short period of time. A Kiwi overperforming the Aussie. But we had warned, once we were in this corrective move lower, that we did expect another leg higher, and that has manifested. Okay. Now, let me also have a look at your questions, because we have quite a lot to talk about, but it's rather I take some guidance on what you want to see. Can you go through Euro Kiwi? Yeah, sure. We can have Euro Aussie, Euro Kiwi examined. Let's go. So, having to do with the Euro USD, I don't have much to add. Blake said that he expects more upside, and it is likely, but I want to remind you that the Euro USD, and then I'm going to go to the Euro crosses, the Euro USD is still being capped by multiple resistances. Just look at the area that got us rejected on Friday. It was the confluence of the 38.2 from this move lower, this ascending trend line resistance, and this descending trend line resistance. All of them confluenced at 111, 111.10. So that area proved, indeed important for the market. We got a rejection, we're moving lower. Now, on the other hand, we have potentially seen the pair create a double bottom while finding support once again in this large descending wedge. So, would I be actually selling here? I mean, you can against the highs, against 111.10, but I'd rather, wait and see what's going to happen from here, because there is not a lot of room to make money within this wedge to the downside. Not at least for my type of trading. Okay, I would rather see the Euro USD breaking to the upside and squeezing people, because I know that the market is overly too bearish, the Euro USD. So at some point, when we do get a bullish squeeze in this pair, I think we can see, quite an impressive rebound. I mean, I think that at some point the Euro USD can easily squeeze to 118. Not a lot of people expect something like that, and that's what's gonna make it become a lot more violent if something like that manifests. Okay, because if you run a poll and say, who thinks that Euro USD can be within a few months at 118, you're going to get very, very few people believing in such a prediction. Okay, and I'm not saying it's a high probability trade, but I am saying that the market is short. We know that from the data. And people are going to really be surprised, and people are going to be closing short positions, and some other people are going to be jumping long, and that on its own should be enough to get the market running the other direction quite fast. Now, let's have a look at Euro crosses, Euro Aussie, Euro Kiwi, Euro Pound. So, first of all, Euro Aussie testing here. I don't know if we can even redraw a little bit the line so you can see it better. Anyhow, contemplating with a breakdown from this like huge ascending trend line support, you can see it here. Perhaps we can even redraw it a little bit. If we ignore a little bit that wick, I think we can capture more like this. I think we can capture more the recent lows. Okay, something like this. So as you see, we had an intraday breakdown from Euro Aussie, but we didn't close below this trend line, and we are consolidating near this trend line and just above the 200 daily moving average. So quite a powerful confluence of supports. So far, this jump higher looks more like a bearish consolidation to me. So I wouldn't be surprised at all if we do break down. Now, does that mean that the Euro USD has to break down in order for that to happen? No, it doesn't. Simply, the Aussie can outperform the Euro. As simple as that, right? I mean, theoretically speaking, they can go both be moving higher, just Aussie moving higher, faster than the Euro. Regardless, you want to be long. This is a beautiful place to be if you believe in the upside, simply because, you have so much support working in your favor. But if we do break down from here, and especially if we post a lower low below that spike that we had, I think there's going to be a lot more downside for the Euros, because this is a formation that dates back to the beginning of 2017, right? So we're talking about a 2.5-year-old formation. Now, Euro Kiwi, as you see things here, mixed. I mean, you can interpret this as a symmetrical triangle. There you go. You can interpret this as a symmetrical triangle, and we're not even really close in breaking out, right? We might see some type of a head and shoulders formation here if you're looking to the downside. We might. I think that as long as we trade below 174.50, we can turn lower for something like this. Okay. Now, in order for me to get more enthusiastic about the downside, I would want to see this trend line break to the downside. Okay. As you see, Euro Aussie, looking a lot more bearish than Euro Kiwi. So, depends on if you want to be long or short. You should choose one or the other, obviously. Now, having to do with the pound, and we can go to the pound crosses as well. First of all, we had warned that a squeeze will come to the market if we break above 123.70, 123.80. That's exactly what you saw happening on Friday. Now, needless to say, that the exact same area, 123.70, 123.80, should be considered support from this point on. So against 123.70, 123.80, being long for another move higher towards 128. And why do I mention 128 specifically? Because as we do in the Euro USD, we also have a larger descending wedge formation in the cable. You can see it here in purple, right? And where does this pass from at the moment? Not 128 to be exact, 127.40. And that's also where you currently find the 200 daily moving average, right? So what I'm trying to say here is it seems that we can easily have more upside in, for the cable, right? And if that happens, of course, should support the pound Aussie and the pound Kiwi. But as I said before, that doesn't mean that the Aussie and the Kiwi cannot just overperform the pound. Now, needless to say, we've seen the euro pound turn lower. So obviously between the euro crosses and the pound crosses, obviously the euro crosses look better shorts than the pound crosses do, during the past several days. Now, having said that, the problem with the pound crosses is, as you can see here, for example, in the pound Aussie, the pound Aussie has been stuck in an expanding triangle since March 2018. And as you see, there is no direction. This market is really directionless. I mean, we get some sharp moves up, down, but where are we at the moment? We're in the middle of this expanding wedge, almost at the middle, just a little bit higher from the middle. Having said that, this rebound higher definitely doesn't have any impulsive characteristics, if you ask me. So the higher we jump within this ascending channel, which is within this expanding triangle, the more appealing being short would be. So, for example, a move towards this channel resistance, I think, is going to be a decent selling opportunity. On the other hand, you can also try to sell a breakdown from 179.20. Because then we're going to have this channel breaking the downside. And then I think that we can easily move lower within the boundaries of this expanding triangle. For example, 173.60 is quite a nice horizontal support resistance area. But until that happens, we are in the middle of this channel, which is in the middle of an expanding triangle. Bottom line, it's like flipping a coin. And personally, if I want to flip a coin, I'd rather go to the casino than which at least is going to have some fun and drinks, than being in front of my computer. Now, not exactly the same, but an equivalent situation here with the pound kiwi. The pound kiwi produced like a false breakdown from this huge ascending channel. You can see it here in purple, but it has been rebounding within this channel, currently being almost back in the middle of this ascending channel. Okay, so yeah, this rebound looks somewhat mature, so we might see some type of a move lower. If we do break below this channel, we should see a move lower to retest the long-term channel support. But who knows? I mean, we might keep rebounding towards 2, right? We have this spike high at 2, which is well within this channel. So I think that neither of those pairs are at the place you should be looking to trade them. Pound Aussie and pound Kiwi, I mean. Okay. Now, let's see. Can you please check pound Aussie? Yeah, I haven't seen your question, but your wish was granted regardless. Now, having to do with what stocks are doing, but before that, I want us to go to the USD yen first. Those of you that are ForexAnalytix subscribers, you've already seen the chart. So yen, USD yen, found resistance at this descending channels, resistance trend line, also horizontal support resistance area at 108. We gapped lower. Now we've retraced most of the losses we got from that gap. So the question is, are we about to fill that gap and move lower? From a risk reward perspective, it looks very, very appealing, right? For example, if we can assume that this was a gap that the market is attempting to fill and then continue lower, we're currently at 107.87, and Friday's high was at 108, let's call it 30, a little bit lower than that, which means that currently, attempting to short that would mean less than a 40 pip stop loss, which isn't a bad proposition if you're asking me. Okay. We also had an initial reaction lower yesterday from stocks. We seem to have also covered, plenty of the overnight losses. But don't forget that there is still this wedges interpretation. Of course, a wedge can also, especially when it's as flat as this one. I mean, by flat, I mean, it's not steep. In wedges, I think that one of the best technical signals out there are descending and ascending wedges, especially when they're steep, because you know that those are terminal formations. On the other hand, when wedges are, a lot more flat, like this one, yes, it is an ascending wedge still, because, from geometry speaking, both the trend lines are ascending, so it is an ascending wedge. But, so flat wedges like these ones can actually prove to be bullish consolidation formations. So, I'm not that comfortable with saying, somebody should be short here because it's a wedge, because of what I just explained. We can easily see here a squeeze higher and a move like this before seeing a sell-off. Regardless if you're very you're very sure you want to be short, you have some clear RSI divergence so far. I mean, even if we move to new highs, which we almost did at the end of last week, RSI would have been diverging by a lot. And we also have several, from fundamental perspective, we have several headwinds at the moment, and several things that can blow up in our face. Recession fears, China trade deal, Brexit that can still go wrong, you name it. That can definitely create some type of a sell-off. So I think the best you can do here is monitor those two trend lines and see what happens from there. Now, since we kept visiting this, the DAX, as you see, is clearly overperforming, in the short term. But as I wrote during the weekend, I don't think there is any risk reward for you to be buying, even if you like it. I think that a move towards like 12,050, 12,100 is going to give you an ability to be long if you want to be long. Until that happens, I think there is not much to do here. Don't forget that the long-term picture here in the DAX is some type of a prolonged consolidation. It might even prove to be a long-term distribution. Okay, so I think you need to pay attention to that. Question about Kiwi CAD. Okay, sure. Yeah, I keep updating those pairs like every few days. It's not that I've traded them recently, but Aussie CAD and Kiwi CAD, having to do with Aussie CAD, what's here, we're retesting previous support as the resistance. So it's important to see what's going to happen from here. If we get rejected from 91 cents, so far we are, but let's see. The pair remains bearish. Now, if we break above 91 cents once again, then we can see a bigger squeeze higher. Okay, be a little bit careful though here, because Kiwi and CAD can be quite similar in the way they trade. Of course, what happens with crude is going to matter, because crude overperforming is definitely going to give a leading edge to the Canadian against the Kiwi and the Aussie, okay? Because the Aussie and the Kiwi do not benefit from higher crude prices. Now, having to do with Kiwi CAD, I know that if somebody is bullish, they can be looking at this descending wedge and say, oh, we had a break higher from this descending wedge, and yeah, we had. But usually you want to see, a lot more momentum than we've seen. I mean, this rebound so far has been very tepid, quite a slow overlapping price action. Now, sometimes you get a slow start, okay? Even from an Elliott wave perspective, if you want to see it, sometimes you get a wave one that is very slow, right? So it's not unlikely, as long as we stay above the previous low, to get an acceleration higher, in which case I would be looking for a move towards 86 cents. But until that happens, I wouldn't keep, my hopes very high. You have one thing going for you though, and that's the risk reward ratio. I mean, you like it, you can be long against the lows, and you have a nice entry, you have a valid argument from a technical perspective. So you can see if that's going to work out for you. I mean, it's not that you can have a 100% hit rate, right? Coach?
Yes, sir.
Do we have a guest for today?
We do. We have Dave Floyd of Aspen Trading with us.
Okay.
A veteran.
Okay. Perfect.
Okay.
So enjoy the interview, and we'll be in the chat room. We'll be back here tomorrow. You name it. Paulie has another webinar left for the day, so we'll be around.
Yeah, we're around. We're around 24/6. What do you expect? We lay it all out on the floor for traders to help them survive and then succeed. So Dave Floyd, it's been a long time, buddy. I'm promoting you to a panelist right now, and I'll unmute you. And if you just scroll along the bottom, Dave, you'll find a screen share green box. And welcome back to Face. You on, buddy? You're unmuted. I've been waiting so long. There we go. Can't hear you yet.
Okay. We can see your charts, David, but we can't hear you. So probably it's something very easy for you to fix. As you have the panel, the Zoom panel, which now that you're sharing your screen, it must be at the top of your screen. So if you mouse over at the top of your screen, you should have that drop down. There is a mute button at the left side. It's the first button on the left. Now, next to it, there is a little arrow pointing higher. If you click on that, you're going to see all the audio settings. So make sure you've selected the proper audio source. There might be some other microphone selected there.
Yeah, I know he's wearing a headset.
Yeah, so make sure the proper audio source is selected there, and once you do that, it should work just fine.
Testing 1, 2, 3.
Yeah,
Got you, Dave.
Now we can hear you. Yeah,
Perfect.
you fixed it.
Gentlemen.
You're a little soft.
You're a little bit low on volume. If you can do something to increase it.
Yep. Let's see what we can do here.
It's very low. Can't hear you at all now again, Dave. Zoom with us, buddy. What's this? Charts are fine. We heard you for a little bit, and then you disappeared.
Yeah, we heard you for a little bit, soft on volume. Now we can't hear you anymore.
I'm still here. I'm just trying to adjust the volume so that you can.
Okay, yeah. But perhaps it's from Windows settings, or if you use some headset that has its own software, you can check it from there.
Yeah.
I can assure you about one thing, David. The Zoom software does not influence the volume of your headset or in any way the volume of your source.
Okay. Any better at all on the?
No.
No.
Let's try a different microphone. I've got another one here that might work. Just
okay, let's see that.
Let's see which one. That would be the.
When I was in high school, I think there was this thing called Mr. Microphone that you could drive around in your convertible.
Stop lying. When you were in high school, they had the invented microphones.
Yeah, they did. It was called Mr. Microphone.
How about this one? Is that?
Yes.
Is that
yeah, Dave, you're there.
We can hear you perfectly.
You're good.
Yeah.
Okay, we'll use that microphone instead. I thought that
it's
was
fine. It's absolutely fine.
Okay, cool. Well,
now we can hear you. Welcome back, bro.
Thank you very much. How are you, Dale?
I'm, fighting the battles every day, just like you. For how many years now, bro?
Since 1995. So whatever the math is.
You're still a pup.
Well, relatively speaking, perhaps.
Yeah,
Yeah.
relatively to me, everyone is. So it's great to have you back. And, I have talked to Dave over the years, going back to FX Street. And isn't this the second time you've been here on Face?
I think maybe this might be third or fourth.
Oh, wow.
Third or fourth.
2.5 years. You're almost a regular.
Yeah.
So Dave, pretty interesting morning to walk into, right? With crude up $5. I can't remember last time we had an opening like this. I was talking to our community that there was this expression, "Don't go home short crude" on Friday over the weekend, and
Mhm.
it's never. I can't remember the last time it hurt someone to do it. So, have you heard that before?
I've not heard that, but obviously oil's a very tricky market to trade. It's not really one
Oh,
that
they all are.
I find oil particularly tricky. I don't really trade it, but obviously I
Yeah.
monitor it just because of the impact it has on other asset classes. And I think actually what's interesting is that when we've had previous spikes in oil, and there's been 3 previous instances, I think, since 1991, the moves have generally been faded overall and by a large degree. So, maybe it's different this time. I'll always hate to say that, but if
Yeah.
it isn't different this time, this move is likely, if you happen to be long crude or let's say USO, probably not a bad idea to be taking your profits and counting your blessings.
Right, or at least a portion, half,
At least a portion, exactly.
just in
Um,
case it is different this time.
just in case. I mean,
Yeah.
again, you start reading things and you can deviate from your narrative, and sometimes that's good, sometimes that's bad.
I'm a big believer in partials, Dave, aren't you? Because, it kind of puts you in a psychological win-win. Like if you came in long crude, you go the door on part of it, you got paid.
Yeah,
And then you're there. If it continues, this is a breakaway gap and we get a runaway gap, you never know. That, it also helps your psychology by taking all the heat,
yep,
all the risk out of the trade.
exactly. You never go broke ringing the register.
Bernard Baruch. All right, buddy. So you're looking at kind of an interesting pair. Are you
Oh,
looking at CAD yen
I
because
am.
of? Huh?
Well, I had it up here regardless of what happened today. I'm overall bullish on the market. This might throw a monkey wrench into it, but by and large, it doesn't seem to be.
You mean equities?
Yeah, I'm
Okay.
definitely bullish on the S&Ps
All
overall.
right. So
And
this is a risk-on pair.
this is a risk on, and CAD yen looks as though this certainly to me looks like a very corrective move. I have it labeled as a wave 4. I
Okay.
did start nibbling on CAD yen this morning because I do think the S&Ps will go higher. There's a lot of reasons to believe that it will, not only the interest rate policy, but Chinese cutting reserve requirements last week. That is certainly, or actually a couple of weeks ago, that is, at least historically speaking, indicative of a higher S&P by anywhere from 10 to 15% historically speaking. So,
Okay.
yeah, there's a lot of negative talk out there and whatnot, but let's be honest, the trend continues higher. The Fed's being accommodative. Yeah, there's some wild cards here, but I don't know.
What if we took out 2940, the breakout of the ascending triangle? I mean, is there a line in the sand? We all could have views and biases, but we also have to know when the picture changes.
Yeah, I
Okay.
would say, I'm just pulling up the S&P chart right here. Yeah, we this trend line right here. I do have this labeled as a B wave, which could allow us to go down to test, 2,800, 2,900.
Okay.
Again, that's how I have it labeled as of now. The backdrop doesn't really feel quite like that, but that is a real possibility. But for me, if we get down to, let's say, 2,940, 2,950 in here,
Yeah.
I might start to reevaluate my overall view. But
Right.
it just seems as though the market wants to grind higher.
Yeah, because that triangle would measure 3,100, wouldn't it?
Oh
Just
yeah,
the breadth of the formation from that low
yeah,
2780, 160 on 2940 gives you 3,100.
yeah. I would say that's reasonable. Again, also based on the move last week, value relative to momentum. When that type of a move happens, when you get that big pop in value relative to the momentum,
Like the Russell outperforming, bro?
Exactly. You
Okay.
typically will see the S&Ps, move anywhere from 3 to 4% higher within a month or two. So, simply do the math. That takes you up to 3,100, perhaps a little bit more. And, again, it doesn't mean that this attack on the oil refinery doesn't have some sort of an impact, because it easily could. Right now, price action doesn't seem to really suggest that it's much of an issue other than in the oil market. S&P seems to be taking it in stride. Dollar Norway's given back all the gains that it had overnight, or I shouldn't say all the gains, but the Norwegian krone's pretty much given back all the gains it had overnight.
Yeah.
Dollar CAD's still fairly weak, so Canadian dollar's still rallying, but again, off of the best levels. So it'll be interesting though when we open at 6:30. But for me, I'm still looking at risk on. So I'm looking at CAD yen, looking at S&Ps. I want to be short 10-year notes, long Kiwi. Not so interested in long euro anymore. It had a fairly decent move last night, back below 110.50. So I'm not quite as interested now.
Dave, I'm interested, and I know it's not a forecast and it's not a wave count, but I'm really interested because I do interview a lot of people that use Elliott. That's their methodology. How there could be so many different interpretations of where we are by guys that are good like yourself. What differentiates your Elliott wave or different people's take on Elliott? Do you think there's anything about what you do and the way you see structure that's different than, because I'm sure you look at other people that use Elliott and you go, oh God, that counts. I don't know how they're coming up with that. Can you kind of tell me how you differentiate yourself using Elliott wave?
Yeah, it's a great question, and it's an opinion of mine that's evolved over the years, just as you garner more information and more more experience. And frankly, I don't want to say a lot less, but I definitely put less emphasis on the technicals than I did, let's say, 2, 3, 4, 5 years ago. That's not to say that it's not important. It's really paramount for the most part. But integrating in other inputs can really help you substantiate or refute what you're seeing as the wave count. Because as you said, Elliott wave, there is a degree of subjectivity. There's the objective rules, but then there's the subjective way as to how you view the price action within that objective framework. So that's where you come up with, at times, forecasts that are at odds with other people that are practicing the Elliott wave methodology.
Yeah.
So, I like to rely on like quantitative analysis, trying to look at different data points or, historical sets of data that might support what I'm looking at the wave count.
Well, I think you kind of demonstrated it when you were talking about how value came back last week, which is kind of a market tell. Then you go look at your charts and go, you know what, there might be more that's bullish the market, even if it's more bullish Russell, or so it's kind of a more of a holistic approach and not just A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, 1, 2, 3, 4, 5.
That's exactly right. I've never been a believer that anything's formulaic in the markets. There's an element of it, but there's also that development of, or that element of feel, intuition, and in this case, other sets of data that can help you with your decision-making process. And I've come to really rely upon that as that second piece. And, I also look at a lot of, especially on the FX market, I look at a lot of options data, risk reversals, implied volatilities, that type of stuff. When you add it in on top of the technical analysis, you start to get a slightly clearer picture. Again, you're never going to check all of the boxes to know if you're 100% right. That's just impossible.
Yeah.
But again, I'm trying to eliminate the false positives as much as possible, just like anybody else. And for me, having that base case on the technical perspective up against these other two inputs, quantitative data, options data, for me, it works. It gives me a better sense of what I'm looking at and increases my conviction, or maybe it lowers my conviction and prevents me from taking a silly trade.
So can you use FX options volume and size and people going in, like say, for example, a lot of guys that are option guys in equities, they're looking at, a huge increase in open interest or a big size trade. And that gives you a tell plus where all the major open interest is a week before expiration. You know that the guys that are the house are going to try and pin it near that strike so that no one makes money.
I'm not really looking at that so much. I'm really looking at more of, how the market's positioned in terms of, what the risk reversals are saying. Are the out of the money puts more rich than the out of the money calls? How is
Interesting.
you on a particular pair? Where is it trading in its historical percentile? I've got a window up here that you can see on the screen right now. All this data comes off my Bloomberg terminal. And I'm looking a lot of times at what this percentile column is right here. And you'll see that a lot of these numbers right now are just kind of, this is on a scale of 0 to 100. Pretty much
You'd have to stop your share and move it to, I guess, because we're not seeing your Bloomberg terminal or any of that. But
that's interesting. I moved the window over there. I wonder why you can't see it. Interesting.
Maybe just hit the share again and then
I'll just
share again. That'll do it.
A different screen. Yeah, give me a second here. I'll
okay.
Move that over.
So audience, community, as you can tell, Dave's not just a veteran, but he really, is proficient at doing this. And so I learned a few things for you that I'm going to start taking a look at, Dave.
How about this right here? Can you see that?
Yeah, and yeah.
Okay, so I'm gonna make this window. This is the window I'm focusing in on. This is one of the pages on my Bloomberg. But what I'm looking at right here, these are the major pairs that I follow. But I'm looking at this percentile column, and as I said, it's on a scale of 0 to 100. Mm-hmm. As you can see right now, all of these risk reversals are basically kind of right in the middle of the range, which basically says there's not a whole lot of information to be garnered. I'm looking for these risk reversals to start trading at, in the lower 5 percentile or the upper the upper 95 percentile. That's when I start getting interesting. So something like Euro Sterling right now is the only one that's trading in the lower 95th percentile.
So that would give you what kind of bias?
Well, it means that everybody is so overly bearish Euro Sterling. That doesn't mean that it's interesting. But you take that piece of data, overlay it on top of the technicals, and
that's interesting, Dave, because I think the sell-off we've had in Euro Pound is setting up a buy.
Oh yeah, for sure.
I'm looking at maybe 61.8 back, and you've just given me a pearl. So I know that if that's correct, that it's a buying opportunity. There are a lot of wrong-footed traders in there, is what you're saying.
Exactly, and
cool, Dave.
We have been short Euro Sterling for the last couple of weeks.
Yeah.
And we're cleaned up and we're ready to go long. I'm not going to just blindly buy it in here. I want to see some sort of a confirmation of prices moving higher. But with this type of data on my radar screen, and then I'm looking at some of the volatility skews, again, that just gives to me some indication of, maybe getting on the other side of the market because everybody's positioned on the other side of the boat.
Could we see your count in EG?
Yeah, I'll go back.
What you're looking for
right now? Yep. Let me go back to that particular screen. It's interesting that I can't bring over a window into the other one. I should be able to see my count right now.
Got it. Yeah.
Okay.
Got it.
So again, the overall count is bearish, but again, I'm not saying that, just because the information I'm seeing on the options market is kind of a short-term, is a bullish indication. It doesn't mean that that's a forecast that's going to last for months and months. The options data I'm looking at is basically using a one month look back period. So best case, minimum case scenario, I'd expect a bounce higher in euro sterling. So my overall wave count still suggests we go much lower. As you can see, I've got wave 1 down, wave 2 correction. Even if we just go from where we are now, 88.50, all the way up to 89.73. I mean, again, that's a nice 100 pip, type trade.
So is three going to be some fib extension of the first wave down?
Exactly. I mean, if in fact this wave count prevails, wave 3 is going to be, somewhere like, let me just pull this in here a little bit so you can see it. Wave 3 is probably going to come in somewhere down around 86.40, which would be about 161.8% the length of wave 1. And I know that looks a little cluttered right now. So
no, that's cool, because I think that's also about 78.6 back of the whole up move.
Let me go back to that daily chart.
And that's where it turned good.
Yeah, exactly. So,
yeah.
So again, the overall trend does appear down based on the wave count, but
Right.
For a short period of time, we can be bullish on this and kind of catch, like you said, some of the traders maybe being
Just a scalp
positioned. Yep.
Okay. All right. So why don't we go back to the menu you prepared and what you wanted to talk about?
Yeah. Well, let's just
sorry if I've interrupted you too many times and got you off track.
No, you haven't at all. I mean, I'd rather have some questions from, what everybody viewing might want to hear about, what you're seeing. The one thing, I'm going to go back to another screen right here, because the one thing I think is really helpful to keep in mind is this right here. This has been the ultimate barometer in this market over the last several months. And let me move that down. Again, back on the Bloomberg terminal here.
Yeah.
This is simply a measure. The yellow line is the S&P 500. Yeah. The white line is basically the spread between investment grade corporates and junk corporates. And it's a very, very simple relationship. But when that spread narrows, when you see this white line moving down, I know this is incredibly simple, but sometimes the simple things are the ones that are the most valuable. As that spread narrows, the S&Ps rally. It's really that simple. If that spread continues to narrow, which it looks as though it's about to, I don't see any reason on earth why the S&Ps won't take out the new highs.
Okay, so that's basically saying there's no credit stress.
No credit stress.
Even though TLT's got hit hard, there's no credit stress. It's probably just a normal correction that we've had in yields and bonds.
That's exactly right. And again, you'll actually, in this case, oddly enough, I'm bearish on the 10-year notes, but that doesn't mean that I can't be bullish on the spread between junk and investment grade corporates. And if that spread narrows, that's bullish for the S&Ps.
You're bearish 10-year notes, meaning higher or lower yields?
I think yields are moving higher. In fact,
okay.
again, using some quantitative data, we've been short 10-year notes. We've got short basically at the beginning of September. Again, sometimes it's better to be lucky. Nice big move lower. I actually think if you're looking for a trade, you should be looking to be a buyer of TLT or a buyer of 10-year notes, because again, using some quant data, let me find it.
I agree.
Over the last 40 years, and I'm kind of reciting here because I made some notes. I can't remember all this data verbatim. But over the last
look at all your gold that they're showing on Bloomberg.
I'm sorry?
All the gold. They were showing all your gold bars on Bloomberg.
Oh, yeah. That's my office right there. They always
there it is.
But if you look, there it is. See, I'm questioning, where's all my gold? There it is.
What's your address?
Over the last 40 years, and I think this is really an important data point. Over the last 40 years, when the 10-year yield has moved 3 standard deviations below the 2-year moving average, the on average pop higher in yields is anywhere from 4 to 5%.
Okay.
What that essentially means is that something like TLT and or 10-year notes could rally of that same magnitude.
Okay.
That makes sense?
Yeah. Yeah, so you're looking for a lower yields, higher TLT, and was a pullback to buy in TLT.
Exactly.
Got it.
Yep.
I tell you what, Dave, I could talk to you for hours, but I think that you've demonstrated that I've learned some things from you in 25 minutes. I want our viewers to know how they could follow you and how they could get a hold of you, and maybe it's a good time to show your website.
Sure. Well, website's pretty straightforward to get to, aspentrading.com. Let me know if you can see this, because
Not yet. You're still on Bloomberg, but
oh, that's right. That's right. I'll go back to my
Okay.
terminal here. And give me a second here. I'll get that.
It was really great talking to you, Dave. I mean,
likewise.
I came in without a lot of clarity, and I have more after talking to you.
Well, I appreciate that. Okay, so let me change the screen here. And I'm happy to address any questions as well. I mean, that's where a lot of people get some value. You should be able to see my screen now.
Cheryl says, wonderful analysis. Cheryl's thanking you. Euro GP might be setting up. Oh, they're talking about my stuff, a 3 drive on a 4-hour. Okay, so there's Dave's website.
Yeah, so I mean, there's a lot of things you can check me out on. Obviously, this is recorded. You can review this. We do have a YouTube channel. Just search for Aspen Trading. I'll usually put a video up there once every other week or so. And if you want, you can just take a look at our research. You can get on for the first month at half off. So just hit the get started. It says get stated. Looks as though that's a typo. Get started. That'll allow you to get on the research at half off for the first month. And then I'm on Real Vision quite a bit. And I suspect a lot of your subscribers are also Real Vision subscribers. You can see me on there.
Oh yeah, they interview our team too.
Yeah, so
Blake and Steve and
I'm on in fact, I'll be doing a new Real Vision video on Wednesday after the Fed meeting. That'll go live on Thursday, so that'll be my next, kind of in person.
Nice.
But
I just saw a great one. They had this Chinese guy that I forgot who was. Kyle Bass, I think, was interviewing him on Real Vision. You have to watch it I think Stelios put it up. This guy, escaped and, China, jails or kills people. Anyway, so great, they're a great resource of content. They get the best of the best. And you know what? That's a feather in your cap to be on there.
Yeah, I appreciate it. It's been great working with them over the last almost 4 years now. So
thanks for coming to a Little League game with us today.
Who is?
I'm kidding.
Oh.
Thanks for playing the small stage with us.
I wasn't quite following that at first.
Yeah, all right.
Yeah, I'll go with Dale, but I don't know where he's going here.
Yeah. Well, really appreciate you being here, Dave, and it's always good talking to you, buddy. And
likewise, Dale, I really appreciate it.
I hope that pips just drown you and your subscribers going into from here to the end of the year. And
I appreciate it.
That you prosper and stay in good health, my trading warrior brother.
All right. Thank you very much, Dale. And thank you, everybody, for having me on here. I really do appreciate it.
It was great having you, Dave. Everyone thank Dave Floyd at Aspen Trading 10. That's his Twitter handle where you could follow him. And everyone, remember, don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. Adios. Thank you, Dave.
My pleasure, Dale. Take care now.
All right, buddy.